Okay, good afternoon, everyone. Good afternoon. What a beautiful day today. To start, I'm going to introduce our keynote speaker here. His name is Andrew Moss, and Andrew is the director for minority outreach at the Office of the Comptroller of Currency, OCC. In his role, Mr. Moss is responsible for promoting and developing effective public affairs marketing and outreach strategies nationwide with national banks, banking regulatory agencies, bank trade associations, minority media groups and organizations, very diverse community, other government agencies, and the general public in support of OCC and the national banking system. He also serves as an expert advisor and consultant to the Deputy Controller for Public Affairs and other agency executives and staff on public affairs matters, particularly as they relate to minority banking issues. Prior to joining the OCC, Mr. Moss held various positions at the U.S. Department of Treasury, Federal Deposit Insurance Corporation, and the National Community Reinvestment Coalition. Welcome, Andrew. It's so great to have you.
Thank you, Watson, and it's good to be here.
Yeah.
As Watson mentioned, I'm the director for minority outreach at the OCC, and recently I've been even pushed into or thrust into a more important role, which is our national director for Project Reach, which I'm going to tell you a little bit about in a minute. But I think what's most important here is to really talk about the need for access for resources within minority communities. And I think it's no secret that over the last quarter of a century, the wealth gap has increased and minority home ownership rate has remained stagnant. And while we've seen these factors, in addition to minority unemployment, has continued to outpace white unemployment, and millions continue to be unbanked or underbanked. So what we've recognized that this has been a financial system that has worked well for most people, but has left others out. And what's even more eye-opening, that approximately 11% of Americans are deemed credit invisible, making it difficult to get access to affordable credit and to build wealth. And these structural barriers make it difficult for many to fully and fairly participate in the nation's economy. And we know that there's a significant portion of that population that are people of brown and black communities. So what we're focusing here now is looking at these various aspects of how do we build wealth. And economic opportunity and success is what we recognize or is comprised of four key elements. We think about access and eligibility, who's deemed credit worthy. We look at is there affordable credit? Is the price fair? Are there affordable financing products? We also think about how do we build generational wealth, because that's where you get the resources to invest. And we know that it's expensive to be poor in this country. And then we also see that there needs to be an opportunity for prosperity and investment. And if you don't have that fair and equitable participation in the free enterprise market, how do you really get a business that can ever thrive and prosper? And then the last part of this that we find is a critical piece is how do we make sure that the trusted stakeholders within a community, such as community groups and MDIs, have the resources that are available to make those types of financing opportunities available. So to address racial and economic equity, last July, July of 2020, specifically, during the social unrest that had gripped the country, the OCC launched the Roundtable for Economic Access and Change, or what we affectionately call Project Reach. The purpose of this initiative was to identify and reduce the structural barriers to full, fair participation in the nation's banking system and the economy. Now, the project brings together leaders from the banking industry, technology firms, civil rights, and community organizations to charge them with identifying specific actionable issues that restrict access to capital and credit for underserved, and developing action plans to those in a limited time frame. And the participants in Project Reach, they've taken on several national initiatives to address broader issues and local projects that can be replicated to address area-specific needs. I want everyone to understand that through Project Reach, our focus is not about lingering on identifying the problem, but moving into action so we can move the levers that perpetuate the barriers. Now, why did we do this? You'll probably ask. Well, despite the trillions of dollars in community reinvestment and philanthropic spending, there are still structural barriers that prevent millions from participating in the nation's economy fairly. And so we recognize that by removing these structural barriers to financial inclusion, it would result in a broader participation in the economy and help millions previously left out of the system to achieve the American dream. And through fuller participation, we strive to improve the lives of those who are directly affected by those barriers, as financial empowerment is closely linked to broader socioeconomic outcomes. And the examples that of the barriers that Project Reach is helping to eliminate include obstacles to accessing credit, looking at affordable housing, and also the capital that's needed for small businesses. So you're thinking like, well, what have you been doing? We haven't heard much about Project Reach. Well, since July, there has been a lot of activity. Participating members have worked towards several objectives to increase access to capital and credit for potential home buyers and small business owners from underserved communities. However, we recognize that a key barrier, the most critical barrier to all this, are the 45 million to 60 million people in the US that have no or an incomplete credit score, which makes credit less available and even more expensive if it is. And to address this issue, Project Reach convened a working group of interested stakeholders to explore potential alternative credit assessment methods that regulators could recognize as a safe, sound, and fair tool to assist in underwriting and helping millions assess more affordable credit. Now, a lot of people always ask, well, is the OCC developing a product or service or endorsing what the Project Reach? The answer to that is an emphatic no. Project Reach is not a public-private partnership. What we see here is a public-private collaboration to address a common issue that has had a widespread impact on communities and our economy. We're not in the business of picking winners and losers or exclude an interested stakeholder who wants to add substance to the movement. You can't create an initiative for economic inclusion if you exclude people. And one of the key tenets of Project Reach is it takes a village to make this successful. And that's why we're asking all to make sure that you're coming to the table and contributing to this and not just along in the sidecar riding. It's about being active. So you may ask, what's the regulator's role? What's the OCC doing in something like this? Well, we're using our convening authority as a regulator. We facilitate the discussions that the participating entities and we provide them feedback on the proposed concepts that they bring in. Our role has been more of a guardrail to keep the innovative energy on the tracks to ensure safety, soundness, and compliance with applicable laws and regulations. We often provide feedback and guidance to participants related to Equal Credit Opportunity Act, fair lending rules, and qualifying CRA activities, as well as other regulatory matters that may arise with some of the proposed concepts offered by participants. Now, what really makes this initiative so special is the relationship building between community and industry. It is amazing to see and hear the constructive dialogue and innovative ideas that come in to develop vehicles that reduce the economic barriers. And in our convenings, we've identified these 4 overarching barriers that are addressed by a working group comprised of industry and community experts that attack the challenge from every perspective imaginable. As I talked about a little while ago, the credit invisibles and those who have been left out of the workstream because left out of the economy because they are deemed not having the credit worthiness based on a score that's formulated by several external parties. And we think that those scores can be ways to really limit individuals, but a different model can actually bring more in. And there is nothing that is restricting individuals from putting together any type of credit risk modeling. And when I say individual, I'm referring to lenders looking at credit risk models that still look at the fair lending standards, the safety and soundness standards. Those are the things that we feel are still critical to ensuring that banks are operating and not taking excessive risk, but yet and still making this type of capital and credit available. So in this first work stream that we've dedicated to this challenge of how do we bring more of the credit invisibles into the financial mainstream, it's looking at what are the various models of alternative data sources that are available that take into account rent payments, utility bill payments, and other types of direct debit authorizations that come through accounts that can demonstrate on-time payment history and boost the measurable credit worthiness of many Americans. A prime example of individuals who need this type of resource are gig economy workers, those who are driving Uber or Lyft or helping to actually support fulfillment services like making deliveries or either, you think about Grubhub deliveries. Those are the kind of individuals that we feel are not getting that full consideration. And that's why we think that this type of work stream will help with increasing more opportunities for individuals to get access to capital and credit. And so we're taking these policy considerations to include how alternative data sources can be included in the underwriting standards that banks and other financial lenders offer to consumers. Our second work stream focuses on the revitalization of minority-owned depository institutions. MDIs or minority-owned banks have played critical roles in their communities for years, for decades. But recently, they have faced a lot of challenges with accessing capital due to growing technology costs and modernizing their infrastructure. Project Reach recognizes the opportunities for more meaningful partnerships that can deliver more than just temporary financial assistance that help minority-owned banks remain a vibrant part of the economic landscape. And so over the last 5 years, the OCC has dedicated significant resources to support the preservation and promotion of MDIs. And annually, we conduct 3 collaboration roundtables that offer opportunities for larger banks to work with smaller MDIs and help to support them with opportunities for either some type of like lending, joint lending participation, or other types of like investments that they can then look to diversify their current portfolios. Some other examples that we've seen as far as larger banks has been they've opened their ATM network to MDI customers at no cost. And they've also made deposits into these institutions to make sure that they remain a vibrant part of the community. And then building off those collaborations, we've expanded the relationships between larger banks and MDIs through the capital investments to build out their technological infrastructure so they can offer the same bells and whistles to their customers like remote capture and electronic payments. And then larger banks are also providing dedicated technical assistance to help with the diversification of product offerings so MDIs can look at ways that they can perpetuate their earnings. And then to solidify their commitment to MDIs, the OCC drafted a pledge for larger banks so they would have a roadmap on what kind of support they could provide to MDIs. And to date, we have 23 banks that have signed that pledge. Moving on, we also recognize the need to increase the flow of capital and credit into underserved communities and strive to ensure that the needed resources are offered to the consumers who need it most. So we have dedicated work groups that are focused on increasing home ownership and entrepreneurship within communities of color and underserved communities. This brings us to our third work stream on affordable home ownership. And in this group, there are several participating banks which have developed or expanded their down payment assistance programs for minority home buyers, and in conjunction with community groups who are HUD-approved counselors to provide the consumer educational component for eligibility into these programs. You know, we've seen that the philanthropic contributions and financial donations are not the objective of Project Reach. Instead, the project intends to implement meaningful change to remove or reduce structural barriers through operational policy and technological actions. And so you're looking at these grant programs and their sustainability. if you're not putting more effort or more resources into them, you're not going to see any type of change. And so that's why we feel that affordable housing has remained an intractable problem, because more resources need to be put towards that. But home ownership is just one way that families build wealth. And Project Reach sees the potential of converting home ownership, bank owned housing inventories into affordable homes through low cost transfer and renovation loans. And in addition to that, we also see that there's the challenge of the decreasing availability of affordable inventory. So some workstream participants are now proposing new strategies that would increase investment for innovative inventory, such as the conversion of underutilized commercial real estate into mixed use that would include residential. And even recently, we've started the discussion about addressing the appraisal bias and the issue that strips away the wealth from communities of color based on the subjective and sometimes unfair assessments. And then our fourth and final key area of focus in Project Reach is expanding access to capital for minority-owned small businesses. And to address the barriers for small businesses, the OCC has engaged many of the Project Reach participants to evaluate models and strategies that facilitate loan participations and consortium lending among large banks, MDIs, and certified CDFIs in support of minority-owned enterprises getting the resources that they need to either start up or expand. And in our small business workstream, participants are looking at the challenges of collateral requirements and transitioning entrepreneurs from the overutilization of their consumer credit profiles to pursue their entrepreneurial endeavors towards establishing a commercial credit profile and small business identity that meets the qualifications for small business trade lines at financial institutions. And through a subgroup focused on small business technical assistance, the participating entities are currently developing a white paper. As a matter of fact, they're close to finalizing that white paper now that would provide a comprehensive guide for entrepreneurs to point them to the resources they need along the small business development continuum. Another workstream subgroup is developing a consortium model for small business lending that creates collaborations and loan participations among community banks, and specifically for agricultural businesses and emerging commercial enterprises and industries in rural and native communities, such as clean energy and broadband partnered with crop production. It's something that we're looking at, or what we call a hybrid agricultural, commercial and industrial type of loan. And in addition to building small business financing concepts, a few participating banks have created and offered virtual procurement showcases for minority-owned enterprises and entrepreneurs from underserved communities to build better business relationships and provide opportunities for growth and expansion. Because we don't see it as just making loans, but also how does the financial services industry get more engaged in creating opportunities as far as business relationships where they are actually paying for the products. And then the last thing that I really want to kind of focus on within the small business work stream, there have been several institutions recently that have started to explore the structuring of a special purpose credit program. And for many of you who may or may not know, the special purpose credit program is an actual vehicle that allows a financial institution to look at particular communities and populations that have been historically disadvantaged and how they can then support them through making loans and alleviating some of the padded risk costs that are typically placed on those loans so that those individuals can still be able to thrive and grow. And then one final thing that I do want to highlight is that we recognize there's no one size fits all approach to economic inclusion. There are differences in what the needs are among economically disadvantaged communities, whether it's market to market, town to town, city to city. That is why we're also working towards creating area-specific demonstrations of reach where local stakeholders have a voice in stating what their needs are and how to overcome the specific economic barriers. So, as we continue on through all of this, we find that Project Reach never has a dull moment and never has a bad idea. But we are looking to bring in more and grow the tent, because we feel like that is where it's only going to be successful. It's not about competing and trying to take away from one organization that's doing something well and another organization that's doing another thing well. It's how do we bring them together so that they can work in collaboration and make sure that all of these efforts are successful. Because at the end of the day, it really comes down to making sure that the communities benefit from the resources that need to be placed there. Thank you. And I look forward to hearing your questions.
Great. Okay, great. Well, thank you very much. That was very informative, Andrew. Great presentation. Now it's time for questions from the moderator. I guess we'll start with my colleague, Ruben. Is Ruben on? I saw him earlier. Dr. Ruben Guerrier, I think you have the first question you want to address our panelists, our speaker. Okay.
Am,
Well,
am I?
okay, go ahead.
Can you hear me?
Yes, yes, we can.
Can I? I'm actually arriving at a location right now, so can I go? Can I be the second moderator, please?
Okay, sure, sure. Well, I can start with my question, the first question. Um, I guess the question is, I heard you talking a lot about MDIs. We are a certified CDFI here in Baltimore, Baltimore Community Lending. And I want to know, how can we be of help to Project Reach to ensure its effectiveness in our communities? Even though you talk about MDIs, which are the minority depository institutions, CDFIs are closer to the ground. We are the eyes and ears of financial institutions for the local people. So how can a CDFI be of assistance to Project Reach?
Well, Watson, I will tell you, someone who has probably been at every aspect of community development, whether it's been working at the CDFI Fund, which is a former life, or at NCRC, or actually in the community itself. I will tell you, I think, as I said earlier, everybody, it takes a village, and we know that. So CDFIs, MDIs, large banks, community groups, civil rights organizations, we all know that every piece of the community is needed in order to make sure that we can uplift the community. So I will tell you, as far as with CDFIs and how they're actually contributing to this, they are the ones who are doing the micro lending. They are the ones who are providing those types of access to those new entrepreneurs who are trying to get their foot in the door. And I think one way that CDFIs can help with this is to, at least those that are non-depository institutions, that if you are starting to identify the needs of products, because something that we're finding in some of our Project Reach efforts is that you may have an entrepreneur who comes into an actual CDFI or MDI and say, hey, I just need this. I don't want a 5-year small business loan. I just need a line of credit for this month. We have some of the larger institutions and our community banks working with CDFIs to develop new products that will help meet the needs of the communities. And with that, we think that there's a way of expanding even additional investments into CDFIs to support those new products on a trial basis, so that those types of new concepts, new financing model concepts, can then show a performance that maybe larger institutions may want to consider.
Okay, great. But just to add to that question, as you are aware, CDFIs are also aggressively offering technical assistance, comprehensive technical assistance, not just issuing access to capital. 99% of the time, before they are eligible for capital, they need the technical assistance, they need advisory services. So with the financial institutions be willing to fund those costs, because it's not income generation, Those are education, it's hand holding, business, financial management, as well as coaching. So will the financial institution be willing to pay and offer those resources to provide a technical assistance before the capital?
Well, see, Washington, I was going to answer that question. And I had that and answered another one, but since you jumped the gun and maybe bring this up now. So I failed to mention that part of Project Reach, every single piece of this has a consumer education or technical assistance component. So in the small business, we are looking at technical assistance and what's needed. The white paper that I mentioned about technical assistance for small businesses addresses a lot of this. A lot of the things that you just mentioned, that it's not just about giving people money, but it's also teaching them what they need to do with the money. Because, and I'll just speak for Andrew Mawson at the OCC, that consumerism runs rampant within minority communities. We are the individuals who buy most of the consumer goods, and sometimes consumer goods that we probably don't need. But you know, it's but we do need to understand that in order to ensure we have businesses, that we have these thriving communities, we've got to make sure that those dollars are there and that people, and as you stated, technical assistance, consumer education, all of those pieces are parts of it. And so there are lenders and financial institutions who are participating in Project Reach that are supporting these efforts and making those types of commitments and investments.
Okay, great. Thank you. Okay, Dana, you can go ahead.
Thank you, Watson. Before I ask my question, I want to acknowledge Watson Bruce, who's out of Baltimore and runs a wonderful CDFI in Baltimore, Maryland, and Dr. Ruben Guerra, who I believe is in Puerto Rico, but operates out of Los Angeles. And I'm Dina Harris. I work in Detroit, and I'm working with some banks to set up a CDFI. And I also run a nonprofit, National Faith Home Buyers. So let's get that out of the way. Watson, I really think you stole my question, but I'm going to go on anyway.
You can add on.
Oh, thank you. I'm gonna say it, Drew. I'm gonna keep it professional, Andrew. But
it's all right. It's okay, Data. They call me. I've probably been called so many different names. It's fine.
Are you guys creating a tracking mechanism that will track the impact of to our communities at all?
So, Dina, I'll tell you. So, the primary focus of Project Reach is the identification of the barriers that limit the participation of communities of color in economically disadvantaged communities. And what we're trying to do is to encourage the action of community stakeholders to work together on putting these concepts and strategies into action. So our role as the convener with these stakeholders and serving as the guardrails, as I mentioned earlier, we know that everyone wants to see like, hey, what's happening here? What's this bank doing? Or what's that bank doing? But we also recognize that community needs differ from city to city and from town to town. So we didn't want to like box in the industry and community groups with a one size fits all tracking tool, because everybody's doing something a little different. And that's one of the things that we didn't feel would be an effective way to evaluate Project Reach. However, many of the actions that these institutions are taking on with these community groups will be evaluated through either a CRA exam or a fair lending exam. And that's the way that we're going to be capturing some of the involvement that these institutions, some of the commitments of these institutions in Project Reach.
And is it possible for community groups to also create tracking mechanisms to help out with that?
Absolutely.
Good. Thank you for that. It looks like Dr. Guerra has joined us. Ruben, welcome. Good to see you. Let's get a smile. Oh, better. And so we'll let you take on the next question. How's that? Can you hear us at all?
Yeah, I can hear you.
Oh, good. Okay.
Sorry that I always get caught traveling when I need to be on these calls. So I'm on my way to. I'm not in Puerto Rico. I'm on my way to Baja California, Mexico. So.
Oh, all right. Well, technology has made us very adaptable.
Yeah.
Yes. Well, first of all, thank you, Andrew, for being here with us and answering a lot of these questions that a lot of people are wondering about Project Reach. I got to tell you that I just learned about Project Reach, which is amazing. I should have known about Project Reach a long time ago. And being in California, and being that we are one of the largest Latino business organizations, the Latin Business Association, that's been around for 45 years, and but you know one of my first questions was already answered by the two wonderful ladies that are on Zoom right now there, and but I have um I have a couple questions, so I don't know if you want me to read the couple questions first or just go one by one.
Go for it.
So the first is how will Project Reach guarantee more loans and access to capital for minority contractors and developers?
All right. So Project Reach has a dedicated work stream on increasing access to capital and credit for small and minority businesses. And as part of this work stream, there have been participating institutions that have been working on technical assistance initiatives, supply diversification programs, and small business financing consortiums. And so many of the financial institutions that have begun to develop these relationships with, or who have made these commitments, have started to develop relationships with minority fund managers and CDFIs to make these resources available to those types of minority-owned businesses you mentioned. We actually see that there's kind of like this convergence between our affordable home ownership work stream and our small business work stream. We see that the need for affordable home ownership has really been hit hard due to the pandemic and the lack of resources that have been made available for home building and or either, any type of like refurbishment of homes. And so we recognize that, either agricultural businesses, it's not just the contractors and developers, but it's the whole gambit that need these resources. So there are particular institutions that are now developing facilities for commitments through these special purpose credit programs that they will make the loans and different types of financing opportunities available.
Okay, thank you for that. The when it comes to business loans, which are very crucial for all small businesses during this pandemic times, especially hair salons, restaurants, nail salons, fitness centers, etc. Will Project Reach help these types of businesses that are hardly considered by the financial institutions, and many of them that had to shut down even during these pandemic times because they couldn't get a business loan?
Mm-hmm. So look, we know that small businesses are the economy, are the engines of the economy, and through the Small Business Financing Consortium Work Group, there are several banks and community groups that are working to like really develop these types of technical assistance programs to help small business owners navigate to what resources are available to preserve their businesses. There's also several banks that I mentioned earlier that have these special purpose credit programs that they want to offer for these dedicated facilities, particularly for minority, women, and veteran-owned businesses. Now, I will even tell you, we're seeing that there's this new shift in how these businesses operate because commercial real estate may not be the same for a lot of these types of like services that are offered, service-oriented businesses. And so a lot of the bankers or lenders that are involved have been working with some of the community groups that have been engaged in Project Reach on how they can help with getting these smaller businesses, or what we call these under 250,000 in revenue businesses, to a point where they're able to cut costs. They're looking at ways that they can also provide them with offsetting their administrative costs for like accountants and lawyers by providing these new like services, these operational services, and that will help them to like really formalize their businesses so that they can then structure their financial their financial records and other things, and when they want to go into a bank for a loan, they're much more competitive in getting that type of like that loan.
Okay. Okay. Well, I guess I have another question for you,
Okay.
Andrew, and this should be an easy one. Okay, it relates to Community Reinvestment Act. Please explain how CRA and its importance in building wealth to the Black and Latino communities.
Well, that you're right. That is an easy one. So, as everyone should be aware, the Community Reinvestment Act is a law that pretty much ensures that all financial institutions meet their lending obligations to all communities where they are located. CRA is primarily a vehicle for ensuring that all communities have access to capital and credit, and it came about because of redlining that occurred within many by lending institutions or banks, particularly in various markets around the country, where they would just want to avoid or draw a red line around a particular neighborhood and say we're not going to lend there. Well, nowadays there are new things that you need to consider. Gentrification changed a lot of that, so people are making loans into a neighborhood, but it may not be to the borrower. So we need to ensure that borrower distribution and geographic distribution of loans match up, and that the individuals who live in those communities are able to get resources just like the people who are moving into those communities. So, access to capital and credit, it's key. It's about buying it. It's how an individual buys a home or starts a business. And these are the ways that people build wealth. But we can't just look at it as CRA as just being one way of doing it. It is about relationship building. You do need to be able to go in and talk to a banker and make sure that those bankers understand the community needs. But it's community groups such as the ones that Dina leads and others that are probably listening on this call that need to make sure that they are more front and center and learn to like really get more of a coalition of individuals together to really address those needs, and not just talk about the needs, but what are the ways or what are some proposals that can be put forth to the institutions so that they can support it. Because not only this is the time, this is the opportunity to just to make sure that everybody that is within the communities, the economically disadvantaged communities of color, the underserved communities, the LMI communities, they have the resources they need to be in this economy. Because if you're not in the economy, you are the economy. You are the person who is providing all of the resources so that everyone else is thriving, and you're giving up your wealth. It goes to an old saying that my grandfather used to tell me: people run to riches, you walk to wealth. Wealth is a slow process, and it's not about just you right here and now, but it's about where you want your community to be later on.
Yeah, thank you.
Drew, those words mean so much, because that's exactly what's been going on in our community, that we've been crawling to wealth, right? Okay, and trying to understand how to get it. And, the thing I know that's most important is having a plan. Okay. Okay. And everything we do in life, we have to have a plan.
Yeah.
So I just wanted to put that out there. Ruben, I think you have a question coming.
Yeah, I had.
No?
Sorry, the internet went down or something. I got cut off, so I had to get back on again. But I was hearing everything that Andrew said, and yes, no disrespect, Andrew. They're all great words, but we got to put it into action, right? So, and we all got to do it together. I'm hearing all this, and as a nonprofit organization, how can we be of greater help to Project Reach to ensure the effectiveness to our business community? Because like we're saying, it all sounds great, but how does we need it's just not out there. I haven't heard of any
Yeah.
of this, of a lot that you're talking about. So it's if I haven't heard of it, then my business community hasn't heard of it. So we need to really advocate hard on this Project Reach and everything that's going on.
Absolutely. And that's what it's about. Project Reach is about you and what can be done. It's not about the OCC. These economic barriers that have been impacting minority communities have been around for a long time, ever since Jim Crow. And so it's time for us to start creating solutions and replicating those solutions when we see that they're successful. And I welcome you and anyone else who has an innovative approach and strategy to get involved, especially in the communities where you are engaged in community development. So feel free to reach out to me or my team anytime. We welcome you. And as a matter of fact, you're right, you should be involved. We've had LA Reach in place for almost a little over a year now. And we're now getting ready to move into other markets to focus on specific community needs and community engagement with lenders around the country. And we're looking at Dallas coming online next year, Dallas Reach, DC Reach, and Detroit Reach later this year, as well as Milwaukee and Chicago Reach. So it's starting to grow, and it started off as a moment in time, and it's now become a movement. And so in order for us to make sure that this movement continues and that this issue of racial equity is not a flavor of the month, we need to make sure that more people know about it. And that's
what about Baltimore Reach? I didn't hear Baltimore.
Walter, you didn't tell me you were ready yet. So
we are ready. I'm here. We are ready in Baltimore, more than ready.
No, I'm joking. And Baltimore, it has a very special place for me because I actually went to law school there. So, be happy to make sure that there are individuals and others that are a part of that community that can help out.
Great.
Now, I thank God I heard Detroit, but there are a couple audience questions out there that I saw that popped up. I see Jules Howie here, who's gave a very complicated question. I'm not going to even acknowledge that she's a part of us, but she wanted to know, what are some of the issues the Project Reach Affordable Home Ownership subgroup on appraisal disparities is addressing? Are there any preliminary recommendations? We're really trying to find useful solutions to address this very real issue, not just in Baltimore, Jules, but everywhere.
Mm-hmm. So I will tell you, as far as the first thing that we're trying to address through a policy standpoint is what is the time frame? When do you need to have an appraisal? Because we've even seen that there's an issue to when you're reducing the amount of collateral that a homeowner has that they could use to start a business and be a part of the free enterprise market. You've created a whole new barrier. So the valuation piece aspect of it is one part of what we're doing. The other piece is, what are the other impacts that are there? And HUD is leading a lot of this, but we're hoping to make sure that that some of the work that comes through our subgroup is also presented and found to be able to be a guiding point for them as well. But FHFA, HUD, CFPB are all engaged with us in Project Reach, particularly in our affordable home ownership.
Well, watching, I guess if you want, I can take this last audience question. There are maybe one or two more. This looks like one of our fellow Detroiters.
Yeah, go right ahead.
Charles Tucker, as a former banker, REO broker, and property management exec, and current affordable housing development consultant, I would like to offer the development of affordable multi-unit, could be single, cooperative housing, can offer low, moderate income households housing and wealth accumulation. Is there any advocacy for housing co-ops in Project Reach?
Yes, there are. And one of the things that we're finding is that, and this is why regional reach efforts or initiatives have become even more important, because we're starting to bring in the city governments, the municipal governments to be more engaged with this, because they are the ones who have either captured a lot of those properties if a bank doesn't have, because we found that most banks have sold their REOs. Surprisingly, that it's not a lot out there, but we find that every now and then there may be a few. However, we know that we have to have other partners engaged with this. And so that's what we're looking at now. And we'll be happy to come back to you when I have a more substantive response that can address that.
Yes. Well, I think that I'm still looking for questions. Have you saw any more watching? Because
No,
I think we're down to our last few minutes here.
yeah, no, I didn't see. I have not seen another question.
Yes, I can tell you. Yolanda Williams says, "Thank you, Andrew.
Yeah.
Excellent information.
Mhm.
Looking at learning how to collaborate."
Yeah.
And I know Charles Tucker had one more question. Okay, never mind. Charles Tucker for a better Detroit. Thank you for that, Charlie Tucker.
Yeah. Well,
So go
well,
on.
Vita, I would just say if anyone has any more, if they want to learn more about Project Reach, please feel free to go to our website, www.occ.gov/reach.
Yes. And there's a handout. If everybody sees the handouts, you'll
Right.
see that there is an entire PowerPoint presentation that Andrew Moss was kind enough to bring with him that you can download and take with you.
Yes, that's great.
There's another question here. How far does the U.S. How far across the U.S. does Project Reach reach?
The entire country.
There we go. Okay. And so I think that brings us to the end of our questions.
Yeah.
Andrew, you've done such a wonderful job. I so enjoy working with you because you just have a good spirit, and we know positive keeps things moving. Okay.
Well, we're going to make sure this keeps going.
Yeah. We can't do anything in a negative environment. I believe
Absolutely.
that.
And we have to work together.
Yes, definitely.
Absolutely.
And we are here to help you pass the
Absolutely.
word, to spread
Yes.
the word.
We will spread the word. So let me wrap this up by saying, first of all, thank you so much. Thank you for helping our audience understand what I told you was a struggle. What is the OCC? So thank you for acknowledging and helping us understand that. I need to tell the audience that there is no summit next week. Okay, next week we don't have a summit because it's Thanksgiving week and a holiday. We will finish the final week of the summit the week after. And if you go to the agendas, you will see that. Also, there on December 30th, I believe Wells Fargo will be. Let's see, is this Wells Fargo here?
Yes. Mm-hmm.
Yep, Wells Fargo will be addressing the racial wealth gap with housing and small business for Black and Latino economics. So that's also important. Also, representatives from CRA Baltimore, that's Watson's group,
Yeah.
will be here. Participants in the workshop will learn from the CRA Baltimore Coalition leadership how to build a successful local CRA initiative that holds banks accountable for their local investments in the Black and Latino community. So again, I thank you. I thank you for taking the time out of your I'm sure, very busy day. And I thank you for the Black and Latino group, which includes Watson, Ruben Guerra, Jules Howie. I think Al Pena is out there in the audience, and a few others. So I thank you for taking the time to spend this hour with us. And I look forward to seeing you in 2 weeks.
Yes. Great. Thank you.
All right. Thank you.
Thank you. And happy Thanksgiving to everyone. Until
Yes.
next week. Please tune in on the 30th.
Yes.
We have some very important things to share. So
Yeah.
thank you, Andrew. This was great. Okay.
Yes, we're not done with you yet, people.
No.